I'd like to ask you, George Pino, what is the biggest risk?
Biggest risk. I'm going to answer that as the biggest risk I see for investing in real estate when you're getting started, because that's kind of what we're talking about as well. And the biggest risk there, I think, is we see this happen a lot. And you'd mentioned like jumping on the bandwagon. I am constantly getting calls, and our office is getting calls over the last month and a half about adaptive reuse for office space, and yet people have no clue what that is or how to go about it. But they hear about it and they read it, and I want to do this, not understanding the whole business of it, and that right now at this point it's just too cost prohibitive for the most part. Um, it may not be, especially if the government's come in and give some incentives. So, I think one, jumping on the bandwagon, but I think that correlates into the ultimate answer, which is not doing your homework or due diligence ahead of time. Just here's my investment money. This is what I heard was going to happen. This is what I'm going to do. I think the program that you're talking about, as far as an insurance company, identifying the risk, mitigating the risk, transferring the risk. Absolutely correct in any type of aspect, and investors should be looking at that as well. Identifying what the risks are, then mitigating and or transferring it. Part of that is also not understanding what's going on in the future or reading that. And we don't have crystal balls. I don't have a crystal ball. No one has a crystal ball that I'm aware of. Was at the Magic Castle a few weeks ago. They had a crystal ball there, but I don't trust it. But when you're looking at the future, though, you can still kind of see what's happening. What laws are going to come into place. If it's going to be a headache. If right now there's insurance industry, at least in Southern California, we're having some issues. There's a lot of carriers that are pulling out of California, and that's going to cause an increase in your insurance rates. Now, if you're in a single tenant net lease or a net lease property, sure, you're looking at, well, the tenants are going to pay for that, but you have to think a little bit further. If your triple net expenses are too high, then they're going to offset it by trying to lower the rent. So it can't just be a complete pass through. You have to think about, well, what's going to work for everybody. And also, the last thing you want is to pass through expenses that cause your tenant to go out of business. So you have to really think about how to go about that and how to plan for that action. A lot of people don't really think about that. I mean, speaking of insurance, I just got a insurance person. I had a company that just denied insurance on a property because the neighboring property had too many homeless people based upon aerial photos. So the insurance companies are getting very picky and pushing, and that's been an issue. But you have to understand that going in, if you're investing, that this is going to just be part of my investment strategy. Here are my expenses. They may be this today, but in reality, after I close escrow, it's going to be here. And a lot of people don't really look at that and have a plan for that action. They're just kind of looking at that snapshot today. And I think that's the biggest risk that they have if they're just not taking the whole picture in.